I don't want to teach with hindsight, right? I don't want to teach with hindsight, and sometimes it's so much easier to and when you're looking at this, it's like, oh yeah, it's a 20% market, it's a marching market. You can see it now. But where should you everybody get your pins out because I'm going to ask you guys to draw on the chart. But where should you have started to recognize that this is a marching market or a bleeding market, whatever you want to say, that is just going to go to the south? So the question is, where on the chart should you start to recognize, Houston, we got a problem, right? And um, at the risk of being hindsight, it's not here. It's when market structure breaks. When the market no longer holds to the value of market structure. Not necessarily, no, not here because this is just a breakout. It's a good market structure. So you're close, but nobody actually got it. Nobody actually got it, but everybody is close. This is too far, so that's not one. This is not one either. It's right when the market misbehaves and says, you know what, we're not doing what they're going to do. But the where I would start to feel that is here. And nobody got this one, but it's right here. Now let's talk about that for a second. Why is this point the point that says the market is not doing what it should do, and now we got a problem?
Because it didn't
And it's
complete
probably going to
this.
break. It's probably going to come down and break this and another outside range on top of a outside range, because you don't typically get an outside range and an outside range, right?
No
Failure to
higher
50
highs.
twice.
It didn't cover here.
Okay, higher highs is one. So this is where I'm starting to think, Houston, we got a problem, right? This is my KPI to be like the market is not. Now I love it. Start throwing out pieces of evidence like it's not creating the higher highs is one. What other pieces of evidence? And there's a big glaring one that I'm not going to give you guys, but it's like the biggest reason why I'm like, uh-oh, we got a problem, right?
It failed to
So
50
This range here.
twice.
Well, we also didn't get a response to this move.
you did right here and here. So for me, let's talk about knowing that this right here is the point. Let's talk about what the market did pre and post, and maybe that'll help you guys to see that. So um, the market broke out of this range. Okay, that's fine. Came down, gave us our first retracement of the pullback. And remember, I usually hunt for the 50% of this move. Gave us that. Good. Normal market, right? Failed to come back up to there. Great. We're probably going to have continuation. And it's going to make this the 50 now, right? So great. Get into sells. Does that. Makes this the 50 right here. Does that. All right. Now we should expect a pullback to the 50 right here. Came up, didn't get it, came down. This is a W, right? It came up, gave us that, and then on the very next candle got rejected. Nothing wrong with this market structure. Behaving exactly what I would think it would do. The rejection of this W was really bad rejection, right? It was like a hard rejection. Fine, whatever. That's fine. And it came all the way down and crossed here, right? Like fine, whatever that happens. Playing the bounce, came back up to 50 of this move. Market structure still holding, comes back down, and then you get this. This is our 20% indicator. What is that? So I just kind of went through and said everything from here to here, normal behavior, normal market structure, should have got the turn didn't happen. The bounce on the 1 hour, like we talked about in the hot seat session, this was the 1 hour bounce, a point where the 1 hour could bounce if it was going to bounce. Right? Nothing wrong. Like you could be playing buys here because you're thinking it's going to bounce, right? But what did William do? And we talked about it and we talked about it when it was happening. And I kind of chimed in at the moment and I said, William, what are you looking for if this happens? And he picked right up on it and he talked about it. And then he
He said,
traded
which
that
one's
way.
easier to fix?
Yes, not bad. He did say that, but it was when I chimed in and said, what do you do if this happens? Remember me saying that? What do you do if this happens? I don't want to give you the answer because I want you guys to think on it, right? So, oh, I think Curtis got it. Curtis, you nailed it. So Curtis got it. 50,000 Dave dollars to Curtis. So what happened here is I was saying, how many times does it touch this area right here? And it came down. If this is 0, right? Came back up. This is 1, came back down. This is 2, came back down. This is 3, right? And I said, what happens if you get a rejection of the third? Right? If you get a rejection of the third, it normally does what? What does it normally do on the rejection of the third? And that's fine. Even if you don't even want to call this a 0, you could call this a 0 here and this a 1. In fact, let's do that even still. Where you got this is a 0 right here. This is a 1. This is a 2. This is a 3, right? To make it a little easier for you guys to follow. So what happens?
Structure change.
What happens on a third rejection with normal market structure?
Should go back to the next end.
It should have rejected, not had a problem crossing here and come all the way up to this point and maybe even cross it and being the apex. That's what the market should have done on a rejection of that third attempt. Do you guys remember us talking about that?
I do.
And then William said, if it's the fourth attempt, what's most likely to happen?
Breakthrough.
Breakthrough.
Be the
And so
3.
that's why this becomes the 20% market, because it failed to run up on the third. It failed to give us a response on here, and it's going to make this the 50% because of this failed event right here. It failed to reject that third. So when I asked, nobody got that because you weren't thinking in terms of 1, 2, 3s. You were thinking in terms of the whole thing. This is where your 1, 2, 3s are at. And if it breaks down, it makes this the 50%. Right? And so it should come down just as much as it does is that, but this is also abnormal. Combining that with the small price cycles, the small runs, all that kind of stuff makes this an abnormal / 20% market. Right here, it was doing normal things until that. Right? Until that broke. And so
What do you mean
if you
20% market?
Well, we say 20% market just as another word like KPI, all that kind of stuff. It means that the minority, if I'm saying that correctly,
Yeah.
the 80-20 rule. 80% of the time the market behaves like this, 20% of the time it doesn't. It's not really, I'm not really giving it a percentage. It's just an 80-20 rule. You've heard that before? Do you know what I mean? Like
Yeah,
most of the
I got
time
it.
the
I
market
got that
behaves
now.
like this, right? So that's what I mean by 20% market. It's just not behaving the way it typically behaves. And we need to be able to recognize when it turns into a misbehaving market so that we can manage our trades accordingly. So right here And this happened to us the other day when a lot of you guys risked out. And it was in Pete's class where Pete said a rejection of that candle, it's going to turn and go down. Pete caught it and William caught it. I don't know if William would have caught it. I'm going to give him the benefit of the doubt if I didn't say, well, it should do that on the 3rd. And he said, well, yes, but on the 4th, it should drop. And it was like, absolutely, you're spot on. Right. So that's what, Pete and William were able to catch these two moves that saved catastrophic events. It's a higher move, but going back to more of a level 1 concept, which is something that everybody should be able to see, is risk versus reward. Even if you were buying here and you were wrong, it's going to be harder to fix. But if you're selling here, right here, you still have this action point, this action point, this action point, that action point, and that action point, where it should not just all of a sudden just shoot up because there was no news in the market. And that goes back to market structure. There's no news in the market. So it should not have shot up. So if you were buying here, buying the bounce, that's fine. But if you were selling here, this is better for risk versus reward. And that is what William ultimately stuck to. The whole session today, William stuck to risk versus reward, right? And he was rewarded for that. But he also knew, I'm going to say, William, correct me if I'm wrong, but he also knew, because he had Talon, that if it did go against him and this was the turn, Talon would have loaded him up for the pullback right here, and goal would have been here. Right?
Yep, that's true.
And so that's why he chose to be in sells, was risk versus reward. Not because, I'm not going to say he called it on the 4th, because when I asked everybody to draw it, nobody drew this one. But if you guys were in buys and playing buys all the way down, that was just the wrong thing for market structure once it broke here and felled this. Questions on that? Any comments, thoughts? Everybody understands? If you don't understand, say nothing.
I understand.
At least
I
nothing.
understand. I was on mute. Everybody was on mute.
Yeah, just catching
I
it.
know I
ahead
should
of
mute
time.
all and then say it. What was that, John? Sorry.
Catching it ahead of time is a trick.
It is a trick, but and the trick that nobody caught, even though we said it in the hot seat class, in the fast track class, I asked it again, but nobody caught the 0, 1, 2, 3. Nobody caught it as this is where market structure changed from I trust it to what the heck's going on. And you can clearly see that once it misbehaved, this is not market structure. That was kind of the most difficult thing with trading, is because there's all these little things that you have to remember, and you have to get it to the point that where, okay, I can see this one every single time. I don't need, it's kind of like driving. When you're first starting out driving, you don't even know what putting it into drive and what the pedals do and all that kind of stuff. And now you guys are at the point where you don't even think about daily commuting. But when we get in bad weather and we start getting into a situation where we need to white knuckle, we think about everything. And that's kind of in trading. When you get into a situation where you're white knuckle driving, now you're thinking about everything. Oh yeah, do I have it in drive? Do I have it in park? Why am I not moving? Come on, it's not turned on. You start thinking about everything, right? And so as we start to learn these things and the progression, And that's, again, I'm going to say it again. And that's why I have the courses built the way they are so that you can learn them in progression. 0, 1, 2, 3 is about the middle of the course because you already understand action points. You understand high probability setups. You understand when they fell. And then now you bring in the 1, 2, 3s. Again, I'm going to look back and I'm like, I don't think this is a hindsight play here. This is like, I'm trying to teach you guys without using hindsight and saying, well, yeah, obviously, but right here is when I said, well, you know what? It's going to break down, right? It's going to break down and it's going to turn this into the 50%. Just like I said on the hour where it's going to bounce. I don't know if this is it, but if on the hour it's going to bounce, we're going to get a response and it's going to come back to the 50. Don't know when. It could take all night, could be tomorrow. But if it breaks down again, it might make this the 50% on the hour, right? And so you need to be cognizant of that. And I'd go back to the very, very same thing as right here. If it comes down, if this is 0, 1, 2, 3, right? And keep pounding on that, it could do the exact same thing here and make this the 50%. That's the problem that you don't know.
I'm seeing that on the hour chart, if we follow the 3 and 50, you got from the apex top, if you widen out on the 1 hour chart, you got the first consolidation going up, then you got the second one, and probably we can experience a third one on the downside because every time it goes down, it's because of news, and this is the same thing happening again. And probably we can see go back to the previous low and then head on an upward channel for the next three to 5 days and then go up or go down. But if we play on the 1 hour chart, the 3 and 50, probably we could experience the third round from doing this same thing for the whole week.
So here's on the 1 hour chart. We just talked
Yeah.
about how this move right here, just a straight down move, is a 20% move because we talked about that in the last class, the last session, how we measured 900 bars. We measured 900 bars in the past, and this pattern or this straight down vertical line only appeared like 9 times in 900 bars. To me, that's an abnormal market.
Yes.
Right? When that happens. And that's the easiest way to spot a 20% market is on the hour chart. Is it doing what it has done in the past or the previous? And the answer is no. Well, you're in a 20% market. Right? So here's the thing, like it should bounce here. So the market should do. And the market should have no problem coming up to this point or probably right here, which is 50%. Right? And measuring that gives us another 30 pips up. It should do that. Let's look into the future right now on the 1 hour chart. What should the market do if it's acting normal? Let's go ahead and draw on the chart. Where should it go? Thank you, Mr. Hunter. Now, if it's not acting normal and is misbehaving, what will it do? What is it most likely to do? And yeah, it will drop the bottom. It'll drop the bottom, come back, test, and keep going. Right. And then like what Robin says, maybe you got to jump out to the daily chart to find where your stuff is. Right. So it will come down to this point right here. That's a bounce point, which on the hour chart probably makes it aligns that with this right here, which makes this area, this bounce point, 50% if it comes down to here and then comes back up to here. it's not likely going to happen. And if it does that, I don't trust that it would do that in a big vertical line like you got here. It could, but it's more likely going to do this on the journey down, right? This kind of stuff that we see. That's what's more likely to do. So this is kind of a big KPI moment for the next few days if it breaks this. It shouldn't, because then it gives us a way lower price down to here. Again, in the world of trading, we deal in the world of probabilities. And we always try to align ourselves with risk versus reward and what the market should do. Now, this week has been a lesson in the market is misbehaving. And so when the market misbehaves, you need to be able to recognize it. Then you need to be able to make a decision. Do I need to put the market in timeout? And do I need to not trade right now until the market comes back to having normalcy? Because this might just be beyond my skill set to trade this market right now. So I'm going to put the market in timeout because you're misbehaving, market. You're in timeout. That's just how I roll. And when you want to behave, we'll have a conversation then, right? But it's acting already. It's acting on the 1 hour like it's going to move up, right? Came all the way down, moved up. But again, this is where I'm kind of seeing it going, is right in here, which is that 50%. So I put a couple buys on, and I'm just light buys, like I said, and I'm just letting them ride and see how far it'll go, secure those and see how far it'll go. Because that's what I'm playing for. Even if it goes into tomorrow, overnight, this is a really good place to secure and let it go because they response to this. I would much rather trade. I would much rather put the market in timeout and trade the response. So when you can recognize that, hey, it's going against me, get out and trade the response. I would much rather trade the response to these type of moves. So you look at this, right? This is an abnormal move. If you were not buying here and you were selling and all of a sudden it went against you, I would just get out off of this move, wait for the response to happen, and then trade once you get confirmation of that reversal right here and trade the response, because this to me is what the market should do. This is what the market is you have no idea how far that's going to go. But the response is so much easier to trade than the initial craziness. Right? You can see that on every single 20% market that the response was easier to trade, right? Except for maybe this one right here, because it did what it did. It ran up, meandered, made this the 50%. And so it ran up equal to that. And that's what I'm saying could happen here. If it breaks lower, it'll make this the 50%. So, and that's what that did. And so if you didn't get out here, you'd need to wait for this expansion to happen. And then once it crossed this, heck yeah, I'm selling all the way down to 50%. And that's my bias. And it took on the daily chart, it took us, once that crossed over to get there, to get down to here, it took us 13 days to actually do that. Took 13 days to actually do that, right? But when you open up your chart in here and you're in a response to this and you know it's coming down to here, well, sells should be your bias. Sells should be your risk versus reward, right? And then as soon as it comes down to here, well, you don't know. Is it going to have a full continuation or is it going to bounce? Right? We don't know. So your confirmation comes when the KPI is crossed and it's right there.
Was it 13 hours or 13 days?
13 hours, sorry. Did I say days? If I said
Yep.
days, I meant hours. Thank you, Rob. All right. Here's the KPI for this move right here. Once it crosses this, you can see it's going to put pressure back to here. It crosses this. Absolutely. It's going to come up to 50% of this move, which puts it right here. Came up, bounced down, and then shot back up. This is market structure KPI. This is everything you can do inside of here. Now, this is easy because we're looking at the past. But past historical movements help you to identify where the market's going to go in the future. It's exactly what's happening right now. Exactly what's happening. It'll either come up here to the 50 or get rejected and make this the 50. That's what the market should do. And it's easier to see that on the higher time frames. Just way easier to see that on the higher time frames. And to this week's market, we've seen a couple 20% markets where this week, this one kind of did that. And then this guy right here just ran up. And I wouldn't necessarily call them 20% markets, but on the 1 minute they were, if they just shoot up and just going. I'm just saying those are times when you guys have probably struggled this week, is when the market doesn't have volatility. But if we can recognize those on the 1 minute with our 1, 2, 3s, all that kind of stuff, then we can start to being in the right side for risk versus reward, right? And that's how you should trade every single day, is identifying what the market structure should do. So 1, what should it do? 2, where's my risk versus reward? And 3, where's the KPI that says I should shift from buys and sells? Again, those are your 1, 2, 3s of really starting to understand market structure. All right. So I don't really want to go off on any other tangents here because just don't, this is fundamental to trading, is what I talk about every single day. Starting to read the right, or choose the right. What is the market going to do over here? So you need to be able to read what the market is going to do. Far too often we're stuck on, it's going down, I need to get in sells. Oh, it's going up, I need to get in buys. But we fail to see where the turning points are, and we failed to see where the market should go, right? Let's do a couple practice rounds here for you guys. So we don't turn the page, we don't do it. Let's go on the 1 minute chart. Let's do a couple practice rounds, meaning we're going to block off this part of the screen. And then I am going to scroll back just a bunch. All right, here we go. We're good. We'll do this. Back to July we go. And we're going to practice reading this. And we'll probably go right here. This is a good one. All right. Because of this right here, what should the response be to the market? What should it be on the 1 hour chart? All right. So there are a couple things that the market should do. Most everybody is getting it right. But the market should, because of this, it came down. It came down again. It should come back to where Robin drew that line right there. It should come back to that area. However, if it doesn't, then what Josh said was correct. If it doesn't, if it fails this and we get another down, it's going to make this the 50%, right? So it should, because of this huge drop, it should have an answer and come back to here. If it doesn't and it crosses this and closes with the body, it's probably going to come to here, right? It makes that the 50%. But if I was a risk versus reward, I would wait for it to cross this and then get into buys. Right? So there's two things, right? You got to always think, if it goes up, what am I going to do? If it goes down, what am I going to do? So those are the two things, right? If it goes against me, what am I going to do? So let's see what it does here. So, okay, so it came down with a wick and it came down and crossed. So you see how it came down and crossed this. And then right here, I'm thinking, all right, it's going to make it the 50%, but then it rejects it hard. And in the next couple hours, it crosses this and this. Now that gives me that confirmation that it's coming, and it just made this the 50% from this move. And so now I have confirmation that it is definitely coming to this part right here. And so on the hour chart, you can start buying in to this point, right? And there, it hit it right there. And now, what should the market do? What should the market do if we're learning to read the right? And the other thing that you're probably considering is that, which is another piece of evidence, it's not the only piece, that we're pretty high in price, right? Price is pretty high. It probably wants to come back down, all that kind of stuff. But here's 50, came up, hit that. It should come down and test this right here. If it breaks that, then it'll come down and test that, right? So let's see if it does that. If it's on the other side, and let's just say if it does cross this, this is where your KPI is. That's where your KPI is. If it comes down, bounces, and has continuation back up here, this is where you flip from all of this is negated, and now you're looking for it to go, and now you're looking for buys.
Dave, question before you move off this structure. Why did you pick this part here as the testing instead of the top of that as a testing?
50% area of that move. Does that make sense? So
Yeah.
you could say of this entire move, it's like on the 1 hour, it's more of a range area. So this would be 50% right there in that area. That makes sense?
Okay. Yep.
All right, now let's see what it actually does. See if we're right. It still came down, it hit where Eagle was saying, and now it bounced. But is it gonna close this, or is it gonna return and come down to this point? I still think it's gonna come down to this point right here, and that's what I'd be playing. But this definitely bounced off of here to come up, and to see if it's going to touch this and then turn, right? So we'll see. There it is. It hit that right there. Now that setup is out of the market. We played this big 20% candle right here that doesn't happen very often. We played it back to the 50%. Then we played it back down to here. Now what do you do? Okay, so now what do you do now? What do you do now? Because this is like the market's almost like the market is reset to zero. Right? How we like to reset and get back to zero. This is the market resetting to zero. It's like, okay, we don't have any 50% retracements. We don't have really anything in the market. So what do we have in terms of market structure right this second that's happening? This is the channel that it's been creating. Right? And particularly when you get this channel with this M that you're drawing, it should do what?
To come down to that middle piece.
But it already did that. It already did that. It already came down and touched that. I think we just moved it over. So the M kind of played out, but what should it do? It should do exactly what Rob drew. Should come back, test the top right there, and then have continuation to the bottom of this channel or make a new low, which I would expect it to make a new low beyond that, right? To break that, but not until it comes back and tests that, but staying within the channel boundaries here. And then when it doesn't do that, This is where, if it crosses over here, this is where all of that idea that I had gets negated because this is the KPI. If it crosses this, oh, well, it's not doing what I thought it was going to do. Now what is it doing? If it crosses this is the KPI for that channel. It negates everything we just talked about, and we got to flip gears, right?
Why not this is the KPI, David?
Because it's still within the integrity of the channel. You can still draw the channel lines. Does that make sense? But here, if it comes out to here, the channel lines are broken. You see that? Your line becomes more horizontal, right, on that channel. But that's a good question. So let's see what it does, right? And so we said what it should do is come down, go up, and then come down and create a lower low somewhere in here. I'm not saying it's going to go to this point. I'm just saying it's going to cross that, right? That's what it should do if it's going to adhere to this market structure. So let's take a look, see what it does. So coming down, kind of got that little bit of a pullback. It failed the 50% of this move. So it failed to even hit that. So it has a strong continuation. So it came down to here. I'm still thinking it's going to put pressure and break the bottom. That's what I'm thinking it's going to do. So it hasn't given me any sign, but now I'm thinking it might not do it on the first attempt. It might have a pullback before it puts pressure on this again. And I just sell if it does bounce back up. If not, I'll just continue on my plan. And it comes down here, hits that level, bounces up right there. There's our pullback. And I'd probably get back in for another attempt towards the bottom. And you see that kind of it gave us exactly what I was thinking. Because of this trajectory, I was thinking we were going to get a pullback to this point, get back in and create that low. Can you guys do this without me? Can you guys do this analysis without me? Guys, we just picked a completely random time frame. We're back in what, July and August, right? And I really did not know what the market's going to do. So we covered it up. I'm just trading market structure. If we traded the way that we just traded from this point right here to this point, if we traded from this point to this lower low where it went right there, from here to here, 97 hours and 80 pips, right? And it would have been completely selling the entire time. It's the same thing that we do on the 1 minute chart. You can do that on the hour chart. It's the same thing. You wash, rinse, repeat. But when these stupid guys come into play right here, abnormal, you just play the response back to 50%. And I would rather play the response than get caught on the wrong side. Eagle saying, so we have to look for channels, 50%, price moving, a previous resistance support levels, and we'll be good. Yeah. It goes back to when I was teaching my boys to play basketball. I was coaching them, and in the very, very elementary, when they were figuring out how to play basketball, I would tease them and I'd be like, look, shooting a basket is easy. All it is arch, angle, distance, flick of the wrist, jump. And that's all trading is, right? Channels, range, 50%, reversals, you get all that down, you're good. And then you just do it over and over. Yeah, there's a lot of steps, but if you're learning how to shoot a basket, you got to get your arch, angle, distance, flick of the wrist, jump. Get it down after 1,000 tries. You're no longer thinking arch, angle, distance, flick of the wrist, jump. You're no longer thinking that, right? But in the beginning, you have a lot that you have to take in and digest. There's a lot between here and there, and that's why we trade every single day, doing the same thing every single day, and we don't get upset in our trading when we get caught on a 20% market and we don't change the way we trade. We don't strategy hop. We don't do anything. We need to learn to recognize, okay, the market got one from me today. We could do this on any pair, any time frame, stocks, commodities, futures, oil. It's the same thing. It's how the market moves and breathes, the ebbs and flows of the market, right? And that's why I coined it the 3 and 50. The reason why it's the 3 and 50 is because you only need to remember three things. But you need to remember in relationship to what? What are the three things I need to remember? In a channel, you need to remember three things. In a range, you need to remember three things. In a 50%, the rules, you need to remember three things, right? There's always three things that you need to remember. And so if you're only getting one or two, you need to be like, what's that third thing? What's that third thing? Right. And that's what the 3 and 50 gives you. Do this over and over
Yes.
and until you can kind of see that. And I took the 1 minute or the 1 hour chart, same thing on the 1 minute chart. It just moves faster. We get more experience on the 1 minute chart than we do on the 1 hour chart because it moves faster. We get to learn how to fix our trades on the 1 minute chart because it moves faster. Our experience is hyper growth on the 1 minute, but then you can take it to the larger time frames and do the exact same thing. It's price action, price cycle, right? This is all market structure. And I'm going to just open this up really quick to be like, when does it change? When does this change? When do we go from selling this market to buying this market? And it really does change. Now that could shift, Duke, when the channel changes. So when you're in a channel, it's a little easier because you should be selling, right? But the channel will change in one or two ways. It'll either have an apex and change, or it'll come down and consolidate. And dependent upon where the turn is, it'll have continuation inside of box 1 or reverse inside of box 2, right? And so as we widen this out, we'll kind of look for that turn, but your KPI could be where Duke drew it, where the channel changes, or it could be somewhere over in this area if it decides to consolidate right here. And the best clue, which I'm not going to be able to do because I'd have to remove this white box. The best clue would be to widen your chart or go to a larger time frame and find that bounce point where it could bounce. Where's the KPI at for this setup? When do we no longer a fan of sells for risk reward? And when do we start switching into buys, right? And so we'll kind of see here. And you can see that it is right there. I mean, I wouldn't necessarily be shifting into buys, but this channel is broken now. The channel is broken now. This no longer has any influence on the chart. And it is starting to get into a range. So I flip from channel or trend to my range rules, which goes to my 1, 2, 3s on the top and on the bottom, because we've just moved enough sideways for me to do that, right? And I'm not saying I'm still selling off of here because I don't trust this move because of the verticality of that move, and I'd sell that into the 50%. But if it comes to the 50% and bounces, then I would probably be looking for buys off of that bounce. But I'm selling here because I'm countering that move to 50%. Right. Anyways, I don't want to get into the nitty gritty. Let's just look like what, okay, buying, selling. I just want to fast forward and see, where does this structure change? It's looking like it's about to change, or it'll have continuation. And coming down to the 50, hit the 50 right there. It bounced off of it. And if it goes up and closes higher, then I'm not. But now you're just playing the range. You're just playing the range. And on the bottom, you're buying. On the top, you're selling, right? So that's all I'm doing is went from this channel to now you're in this box and you play the 50 of that box, right? And come down, and that's what I would expect it to do. Came up, hit the third, got rejected, went all the way back down to the bottom, right? And that's what it does, going all the way back to today's session. It rejected the third And anytime you see a rejection of the third in a range, it should come all the way back down to the bottom of that range. But if it doesn't, then you got a fourth. And that's what happened today on the other side, the fourth, and then had continuation. And that coming full circle, that's the reason why I didn't trust it at the bounce and it was an abnormal market, is because it was the fourth attempt. But there you go. The market structure has just changed from this channel is no longer having any influence to now this range on the market is influencing it. And just like that, we switch from our channel rules to our range rules. And this happens so fast on the 1 minute, but days on the 1 hour. This is a great class to start to understand where your KPIs are, market structure, understanding your 20% markets. And if you don't know how to do this yourself, I'd highly, highly recommend doing this, covering the chart, finding a place, and then practicing where the market should go and reading the right. And I really do enjoy doing this type of a class because this is what we're seeing in the market right now, right? We're playing it top of mind. This is what we're witnessing. This is this week's market. I love, love, love how the instructors and everybody has navigated the hot seat sessions because we've been here, done that. Everybody's starting to see that and recognize it and get better. And it's awesome to see that in a market like this, we've been profitable every single day, right? So that's the cool thing that we've seen 20% markets and we've been able to navigate them. All right. I think that being said, let's turn the page. We will see you guys tomorrow for some awesome. I'm excited to share what I got to showcase to you guys tomorrow. If you got only 50% of this, go back and watch this again. Looking at you, Robin. All right. Thanks, guys. And we'll see you guys on the morrow.